So part 3 of my sort of candlestick analysis videos, and the power of these sort of reversals, 2B reversals, which led me then to realise that the highs and lows of candles actually became extremely significant. And apologies, someone's text me. So this reversal here, they're everywhere, to be honest with you. What you're looking for, I was going to show you this one, but this one's just as good. The high, the low, the high, the higher low, higher high. We're on a monthly chart, remember, and then you sing it the other way: high, low, lower high, lower low, until you close below the penultimate candle's high. Low, rather, apologise. So we can draw a level on that candle. And you wait for the close below, and it is precise. I haven't even tested or checked this one to see whether it does in fact close below. The low of that candle is 5133. I could have looked just over there, 1.65133, and the close of this candle, you can use the open of the next candle if the close isn't below to make the confirmation. In fact, this is, oh, here we go. The the open rather was 164772, 1651. So we did in fact close below that. Oh, we can clearly see that there. So then we get a pullback to test the support as resistance, which clearly happened, and then it's continued on down. So that's the reversals. Now I'm going to do the opposite direction: high, low, lower high, lower low. When the high of that candle is broken, the my mouse is playing up again. With a close, we have a pullback to test the resistance as support, and then you can continue on. So you would continue with this candle using the lower time frames, because that's the close above that high. So then you drop down to a couple of time frames below. That's one time frame below. So this is the retracement in action here, as it were. And we can go down to the daily. And zoom out a bit. And there you can clearly see the daily has retraced. And then when you get the breakout with the histogram, or you get the same combination happen again, which is your high, low, lower high, lower low, you'd need to break above the high of that. It didn't happen. You get the you get to sing the song again because you've broken that low with this low now. All the while you've never got a valid signal to the long side, either on your indicator or your candlesticks. But on this daily, the minute you get a high, low, lower high, lower low, and then you can sing the song in the opposite direction, which, remember, you can't do any of that here. Low, high, higher, low, higher, high, higher, low, higher, high, and a close above that penultimate candle there. That is when you can go long, and you can either wait for the histogram or you enter long, but you will get the same process again on the lower time frame. We've gone from the monthly, remember, to the daily, and now we could go 2 time frames lower onto the H4, remembering where we are, of course. And remember, that was the daily high you needed to break and close above with the daily candle, and lo and behold, look what happens. It comes back and tests it as resistance, acts as new support. And you can do exactly the same again, doing the low high song on this H4, to get into the trade long. There's lots more to this, guys. Of course, you have to make sure you don't reverse against your previous reversal north, a valid reversal. But the point I'm trying to show you is how these levels get broken and tested time and time and time again. If there is no significance in that, I'll eat my hat. So let's go back to the monthly chart again. Excuse me. Here is our trend. Forget this was a part of the 2B video. This is our candlestick trend. High, low, lower high, lower low, and pull, and then low, high, high, low, high, high. Notice this did break, in fact, this resistance level here. So that was really the resistance level that I would have expected price to stop at on this reversal. But if we go down to the lower time frames, you need a divisor of 4 at least, because each candle contains 1 month equal 4 weeks, and then a week equals 5 days, and so on and so forth. So if we have a look at this on the weekly, we will start to see the trend, the internal trend on those candlesticks. Low, high, higher, low, higher, high, higher, low, higher, high, pullback, continuation. You can do it on the line chart. Low, high, higher, low, higher, high, higher, low, higher, high, pullback, continuation. If you discipline yourself to only trade the 20 break, the break of the 20 level, you're going to get far more success. You could have entered over here using the histo, and what I would have waited for in this instance is that push up being the initial push, and then break the high of that one, or break the 20, whichever comes first, which is this one here, and then continue. So there's masses and masses of ways you can use all of this stuff that I'm showing you, and there's masses and masses of ways I've used it in the past. You've got the downtrend going on here, which you can look at on the line chart as well. High, low, lower high, lower low, lower high, lower low. I consider a valid break of the low to be a valid connection point for trend analysis, for the descending and ascending trend lines. So this is not valid until this low is broken by price here. That's some sort of Martin Pring, I think. Google him. I read up all about him. He's got loads and loads of different charts to look at, but I don't think he ever mentioned the break of the low being the valid high or anything, but that's when you can tighten up your trend lines. So effectively you could start to think about getting in the trade here, waiting for your signals from the RSI histogram that is non-repainting, and then consider trading. So the last 3 videos really have been all about the precision, the precise nature of candlestick analysis. So instead of having to do all this swing trading, and every one of these valid highs is resistance you need to break. Remember I said it was, according to my way of looking at it, this is a valid level of resistance. So in the old days, before I looked at candles, I just used to draw a level on there and wait for it to break, and then the next valid level would be somewhere around here, well, this high here, and I'd wait for that to break and the price to close above it, possibly use it as support here. You know, you'd get a ton of drawdown if you took the first exit, let it come back and retest it, or first break should I say, and then, you know, there's no looking back. All that's happened here is if the institutions or whoever manipulates the price has pushed it back until there's no more sellers in the market, and the price can then only go one way. But I have a great belief it's all manipulated anyway, so that's my belief, I'm sticking to it. So instead of having to draw these sort of very vague levels of resistance, we can do it just on the candlestick highs, on the higher time frame, sorry. So we just end up with, they're almost in exactly the same place. That's no coincidence. But you can draw it on the highs and just wait for the candle highs to break. That was part of the transition from looking at swings to just studying candles, and then the precise nature of the candles, and it just goes on and on from there. This can be applied to anything: stocks, indices, and forex, so currencies. They're everywhere. And these also represent 2B reversals. If you look at the internals, you'll be able to find tons of 2B reversals. You'll be able to find tons of cup and handles. All these different swing chart patterns can be easily identified once you get zoned in, tuned into it on just pure candles. And that's how my candlestick analysis evolved. So thanks for watching, have a great day, and I hope this has had some use for you. And if you like my stuff, like the video please, subscribe, and then I can pass it on to more and more people, because I really do want to just share this stuff, because I feel it's so powerful. Thanks for watching, have a great day.